Everybody, this is the top-down analysis for the week. What we basically see across the forex market is dollar weakness, continued yen weakness, and Swiss strength. Well, these might be the main themes for the week. So let's just have a look at the euro dollar, because it's such an important currency pair, and we have some nice development here. So coming from the higher time frames, right? The price could not break lower, so now it's testing higher. And but we have to see, right now these important levels is marked by the errors. So what is going to play out? Well, the market has to show. Currently, we had this technical pullback. We thought that should happen. That's a technical bounce, right? Bounce back down, and now the bulls took over. Let's see if they can break this high. Then this is the next move. If it breaks to a new low, well, then this is the next move. Apart from that, there's not much going on here from the higher time frame. We just have to wait what's going to happen. Now let's have a look here at US. So Swiss strength and US dollar weakness, and that's what we see here, right? So we had this strong pullback. We were overextended from the moving average, so that was a snapback to the moving average. Not only that, and that's what happens. Can happen. It's not uncommon that we get a snapback beyond the moving averages, like beyond 21 into the 50, and that's what we saw here, right? So this was basically the last move, right? A hammer candle, and now we are retracing back, and there's a lot of room to go till the big number that clusters with the last low. So here nicely we've got a few intermediate stop run levels and a big number, and we might actually get after last week's not very volatile big bars here on the daily, well, we would actually see some bigger bars to follow. Because if we attack these stop run levels, well, that's what we should see, right? Bars of that size or bars of that size, and we wanna get alerted when this low here breaks lower. So when the big number gets attacked, then things are getting interesting. So today is Monday, right? So it's the first look at the market. Here, Swiss strength, yen weakness. That's what we see here. Beautiful trending chart, right? It's at the big number. It's a very special big number, right? So even the monthly is pushing against. We don't have more price history. It's basically from what we see here, often for many bars, many years back. It's an all-time high in the yen versus the Swiss. This is a momentum-driven chart. At some point in time, it will pull back, right? Back to the moving averages basically, but we might get another push, right? Another couple of months, big green bars, and that could happen when we actually break the big number, the 170. We had marked that down here. It was a magnet, so it went into the magnet, couldn't break higher, so now this is a pullback. The bulls finding strength and support here. Now, because there's this opportunity, right, that momentum-driven chart, so we want to trade momentum till it ends, and it's an important, it's a big number, and if it breaks, we could get a big move. So it has swing potential, right? And well, I'm stalking this one here, 60-minute for an S1 pattern. Well, I'm aware that it's an oval sideways TC1. It's an oval sideways at TC2. Well, it's nicely trending on the weekly. It's in a momentum-driven chart on the monthly, right? So it has a lower win rate, and as well the 200 moving average goes through it, which is not a problem, right, in TC, because as of entry, well, we are above the 200, but it adds a bit more of volatility. So let's see if there's a breakout bar, and then a rebreak. And then I'm actually looking here, only a small breakout bar would not be enough. I want to see, and that happens with those oval sideways trades. I want to see more, like a more obvious breakout bar, right, which gives them the energy to the other side. I'm not so much looking for a low risk entry, for a small bar, because their swing potential, a bit bigger risk, can do very, very nicely here, right? So I might take only half a risk because it's an oval sideways, and it's an important level. So price might get there again, get rejected. So the idea is once we get there to the 170, which is a resistance and a stop run level, well, that this break is already break even, and that shouldn't be a problem, right? Because there's enough room to go. It's well above the consolidation. So this is basically a play for this week. We're playing the higher time frames. Next one, again, yen weakness. Here we've cut through, like slowly, steadily through these stop run levels. Now we're approaching here the big number, the 99. It's not only a big number, but it clusters with the last high. And let's see what high was that. Yeah, well, that was just a multi-year high, right? And if that falls, okay, there's a very big number, the 100. Well, then this acts as a magnet, right? So this is basically what we're looking for. So again here, stop run level plus the very big number up here. So that gives opportunity from the higher time frame. This is trending. Well, this is oval sideways, right? Well, looking for example, this could be 2 touches of an S2 pattern forming on the 60. Well, then this would be oval sideways. So again, here I would risk maybe only 0.5%, but be aware that this is that I would like to swing trade it if it develops. So this is another play for this week, capitalizing on higher time frames. And then CAD Swiss, so Swiss strength, right? Nice bullish chart. It's basically sitting here on the double bottom. It has broken it slightly. So we still, there's no stop run move yet. So we're still there, right? To capture that. This is a move, so we can get a momentum move of equal size. Just have a look here at the monthly. Yeah, it's free fall territory. We've broken the Corona week low. Now what we have here is an S1 pattern, right, on the 240. I don't want to jump right on it because this is a very important level. We're basically still in oval sideways, right? This not, because we have broken lower, definitely lower, but this one only marginally. So I call that we haven't completely broken away. I want to be a bit cautious because we have not touched the 21, right? So well, let's see if it gets up here. Let's just mark that. If price gets up here, I might trade it as a trade with a discount, or then I would like to see that it actually comes up and touches, right, the 21. So the 21 currently is at the 65 level. So we could see that that price goes somewhere up here. Is it still a low risk idea? Well, yes, right, because there's a lot of potential for this to go lower. And should we break away from this? Well, that's an S2 pattern as well, right? 1, 2, 3, 4 touches. Well, for this S2, let's just see if it's trending. Yeah, we're trending. Well, for this S2 here on the weekly, the stop would go here behind the 66, right? Well, it would be up here. So if this plays out, well, that's a much lower risk idea, right? With a much tighter stop. So there would then be a pattern, an S1 within an S2 on the weekly. So nice higher time frame opportunity setting up here, or we can see that this might come up during the week.